Hi everyone, thank you for joining us today. We're going to be talking about IR35 from a contractor and freelancer perspective and how it may impact you after the changes come into effect on the April 6th this year, so only a few weeks away. It's really wonderful to see that so many of the freelancers we regularly book are attending today, but I've also noticed quite a few new people. So for those who don't know ourselves at Beyond the Book, there's myself and my colleague Kaiser. Kaiser's had issues at the moment with her video, but she is here and you will hear her voice. Say hi, Kaiser.
Hello everyone.
So both myself and Kaiser regularly book freelancers into creative agencies and brands across the UK within the creative, marketing, digital and PR sectors. So whilst myself and Kaiser have done a lot of training in IR35 off-payroll legislation, we aren't the experts, which is why we've asked very knowledgeable people at Brookson to join us. And as you can see, Rob is on the call with us today. Rob has over a decade of experience within sort of the umbrella and accountancy sector. He has sat on advisory boards and he has played a lead role when this legislation rolled out in the public sector in 2017. So I'm going to pass along to Rob now and he can start us all off. Hope you all enjoy the presentation and you find it really useful. And over to you, Rob. Thank you.
Good, thank you. Yeah, great introduction. Yeah, absolutely. We're going to kind of chew the fat, so to speak, on lots of different questions floating around. Bit of a recap in terms of IR35, just so kind of everyone's knowledge is at the point where we want it to be. I'm sure there's probably lots of people within the group that have paid very close attention over the past 12 months and will have really, really good knowledge. And some of those in the group actually may have looked at it last year and maybe just need a bit of a refresher. So we'll kind of cover those bits. In terms of housekeeping as well, because we do have quite a big crowd on today, we'll kind of go through FAQs. We've got a really kind of structured FAQ section that we put together based on our experiences last year. But absolutely, there's an opportunity here for you to ask questions as we go through. Now, normally what will happen is a question that will come through may be covered on the next slide or two, so don't worry if we don't respond. If we can't answer all the questions as we go through, depending on time, then what we'll do is we'll collate all of those questions at the end. We'll complete an FAQ specific to this webinar, and we've got everyone's email, so we'll just send an email kind of summary and an FAQ document on afterwards as well. So don't hold back. And kind of ask as many questions as possible, even if we can't answer them today.
Lovely.
So, kind of in terms of who we are and why have Beyond the Book come to Brookson to talk to you around IR35, and there's a couple of reasons, and I'm kind of going to summarise it now. So, in terms of who we are, so with Brookson One, we've provided payment solutions for freelancers now for the past 25 plus years. So whether that's limited company, kind of self-employed, outsourced employment services, we've done that. We're chartered accountants by trade, so we're regulated by the ICAW. And back in 2007, we set up FCSA along with two other large umbrella businesses to set the standard for compliance within our sector. The reason that's important is because, unfortunately, the umbrella market, and we're not just going to talk about umbrella today, but it's relevant. The umbrella industry is an unregulated industry, which is a shame, but it is where we're at. So FCSA is a trade body to set the standards for compliance. We're audited every year by an external party, and the findings are published directly to HMRC. So in terms of when you're looking around for solutions, certainly FCSA is kind of the starting point, I'd say. Then we have IR35 itself. So to really understand IR35, you really need to kind of understand employment law, and that's what we do. So we also are accredited and regulated solicitors. So Brookson Legal specialise in employment law and have done for the past 20 years. And then we have Brookson Financial. The reason I brought this into the slide deck is because some of the FAQs that we're going to cover do touch on kind of pensions and really some of the questions that we're going to talk about you shouldn't be talking about unless you have an understanding of financial services and you're regulated to do so. And you'll be glad to know that we are regulated financial advisors. So,
very important.
Yeah. You know, there will be a bit of backwards and forwards as well. So for anyone thinking, oh geez, you know, am I going to have to listen to your voice for the next kind of 50 minutes? No, you won't. But I'll be doing the majority of the talking. So let's just kind of rewind and kind of understand what's going on in the IR35 world. So IR35 itself, it's not new. It's been around now for 20 years. And this was brought in initially to understand if you are operating as a limited company, are you genuinely self-employed or are you really a disguised employee? And kind of pre-2000, there was no legislation to govern this. And that's where it came about. So in 2000, HMRC set out a kind of a set of rules to really try to understand, are you self-employed or are you not? The difficulty is that the legislation itself is or has been very subjective, and the cases that HMRC have decided to pursue and taken to or been challenged at a tribunal haven't been very successful. So it kind of leads us up to a point where back in 2000, HMRC were estimating that if they introduced IR35, they could recover around about £300 million worth of unpaid tax. It didn't happen. You know, we've got stats now to show from 2003 to 2008, they only accrued around about 9.2 million. So HMRC are having a real difficulty enforcing this piece of legislation. And it's not just because the legislation itself is subjective, it's the sheer volume of individuals operating through PSCs, personal service companies. You know, not to be exact, but there is around about 600,000 PSCs in the UK. HMRC,
can you explain? So PSC is a limited company, personal service.
Yeah, sorry, yeah.
Yeah.
Yeah, so a personal service company is a kind of a limited company. So it's a version of the limited company. So this is when you're kind of the sole director of your limited company. It's not a public limited company or a partnership. So HMRC, yeah, no, it's good. So we're talking around 600,000 in the UK. Ballpark figure, HMRC estimates around 1 in 3 don't apply the rules correctly. So that leaves around about 200,000 PSCs, limited companies, HMRC believe are non-compliant. But again, just that reality of being able to go out and assess those workers, it's just not going to happen. And it hasn't, we know, we've got the stats. So back in 2017, HMRC changed the rules and they moved the responsibility up the supply chain to the hirer. And that's what we're going to experience in April. But what happened in 2017 is they brought it in for public sector bodies only. Although they didn't say it at the time, it's quite obvious that this was going to be kind of a dry run. It was going to be a test to see whether it worked and whether or not we could roll this out into the private sector. But actually what we did experience back in 2017 was a large amount of panic. We saw that hirers left it to the last minute, not too dissimilar to what we're experiencing now. We saw clients kind of disengaging with PSCs altogether, but not in the right way. And there was kind of a lot of questions unanswered, I think, back in 2017. It didn't stop them going ahead, but it did give us a really kind of good learning experience and gave them a good learning experience ready to roll it out into the private sector. So in terms of how we understand the IR35, you could spend days talking about different scenarios and what if, and you know, in this particular scenario, but probably the easiest way to look at it is we look at a trinity of tests. So we look at control, we look at personal service, and we look at mutuality of obligation as the real kind of, I guess, the foundations of an IR35. So if I was to just give you a little bit of an insight in terms of what they are, so if we look at control, You know, we've listed it here as kind of a how, what, where, and when, but it's really how much autonomy do you have in the work that you carry out? You know, does somebody tell you how to do something and when to do it, and you know what specifically needs to be done, or are you left to your own devices? And this is where the kind of subjectivity comes in for IR35, which doesn't really help anybody. But yeah, I guess you could probably ask two different people the same question and you may get two different answers at a client. Then we have personal service. Personal service is a big one for HMRC because in their eyes, it's not the individual that's carrying out the work, it's the company, it's the limited company that's providing those services. And you tend to start to look at substitution clauses and the right of substitution when we look at personal service. So if you could not complete the work, could you bring in somebody to carry that work on your behalf? And would the client allow it? So is it allowed contractually, and would they allow it kind of in working practices as well?
I think in our industry, sorry, I think that's quite a key one in the sort of creative world, because often a client is thinking that they are kind of buying someone, you know, they've seen a style, or you know, so I think often the freelancer can have similar skills, but it's how they apply that. So it's, yeah, I think from a creative industry, what do you think on that side of the fence with regards to that, you know, sort of personal service side?
Yeah. Just on that point as well, Anna, just because you may not be able to provide a substitute in lieu of your services, you know, if a client's really bought into you, you know, your creative flow, what you can bring to the business, the fact that you can't bring in a substitute does not mean that you're going to fail IR35. You know, these are the foundation blocks. You may not be able to have all three. If you only have two, it's really about strengthening each of the other two.
So I think that's really important. It's I say, well, it would be ideal to hit all three, but if you don't, sometimes it may be difficult to substitute yourself in this industry.
Yeah, absolutely, absolutely. Now we've also got mutuality of obligation as well. So this has been a hot topic when we look at HMRC's CES tool, and HMRC have really kind of struggled with the concept of mutuality of obligation. In their view, mutuality of obligation is always present, because if you agree to a role and you agree to a piece of work, then you're obliged to complete that piece of work. Well, that's not really what we're looking at here with mutuality of obligation. What we're looking at is, what are you actually going in to complete? So when you when you agree to a role, you are agreeing to complete a piece of work for a particular price within a particular time scale. Now, if the client offers you more work afterwards, you have the right to accept or decline. But if you accept, we really need to start looking at a new piece of work, you know, potentially a new contract, something that outlines the new requirements. And you don't tend to get that. So what you'll find, you know, not just in the freelance industry, but the contractor community, interims, you may be brought on for a piece of work that was originally supposed to last for 3 months, and you may find yourself at the same client 3 years later. You know, they really like you and you're really good at what you do, and you end up getting lifted and dropped onto new pieces of work. But there's no paperwork, there's no kind of trail here to really understand when you finished one role and when you started another. So yeah, I guess today it's not to really go into the nuts and bolts of IR35, it's just to try to get yourself into, or try to get your knowledge to a point where it's not just one element, there's lots of different moving parts for IR35. It is subjective, and we're now moving into a world where maybe beforehand you would be applying these tests and you'd be looking at yourself and thinking, okay, can I tick the box from a personal service point of view? Can I tick the box from a mutuality or obligation point of view? And can I tick a box from control? But now it's going to be moving on to the clients. If you just give me just 2 seconds as well, very embarrassing. Give me 2 seconds.
That's all right. So hopefully we've got quite a few of you on the call today. So as I keep the questions in the chat coming, I say we'll try and get through as many as we can today. And back with Rob.
Yeah, sorry about that. You know, working from home, it's always the way. You know, you arrange a webinar and you get a gas delivery. So not Amazon today.
Sure it wasn't Amazon. I was going to say, yeah. I'm sure we all get them every day, don't we?
That's it. I kind of live in the sticks, so I've got a kind of a big gas tank in the back garden that needs to get filled up. So I've got my hot water, which is good. Anyway. So in terms of what's changing, we know why IR35 was brought in. We know the difficulties that HMR face in enforcing and policing this piece of legislation, and we're brought into the public sector. On the face of it, it's worked, so they're now bringing it into the private sector. So we're now saying that from the 6th of April, any work completed after this date, the new rules apply, and the new rules are similar to public sector in the way that the liability and the responsibility moves up the supply chain to the hirer or the client, depending on your terminology. And what the client now has to do is to meet a number of different process obligations. So first process is creating and cascading an SDS document, so a status determination statement. And what this is, it's a rationale document that explains whether you are inside or outside of IR35 and the reasons why. Now, there's no set format for this, but it needs to be comprehensive enough to really show you why you are going to be in or out. And that's new. So beforehand in the public sector, they didn't have to provide this document, so they just simply say you're in or out. Now we're saying that this information has to be provided not just to you as a freelancer, but if there are any intermediaries, such as a recruitment agency, it has to be passed to recruitment agency and also to individual freelancer. Okay. There's a new challenge process in play here as well now. So if you disagree with your determination, you can challenge your hirer, and the hirer has to respond to you within a 45-day window. Now, they may disagree with your disagreement, but ultimately they have to respond to you within a kind of a 45-day window. There's a new liability flow in place now as well, so it's not just the hirer that's on the hook, it's also the recruitment agency, or if there's an intermediary involved, like a recruitment agency, they are also on the hook to make sure that IR35 rules are applied correctly and the correct taxes are deducted.
Can I just say, so in our industry, the likes of Juno or Worksome or platforms such as those who help put bookings together, so it's agencies and big platforms like that have liability as well. Are you there, Kai?
Yes, so sorry to interject here, Rob. Can I ask you a couple of questions about the SDS process?
Absolutely, yeah, fire away.
So in terms of the tools available, what are the main tools available to do a status determination assessment?
So, yeah, HMRC have got their online tool, haven't they? So they've got the assess tool, but you can go through a series of questions. You've kind of got an algorithm that sits behind a Q&A, and it'll spit out an SDS at the end. But as I say, there is no set format to an SDS. What you should have within this is those key indicators that I mentioned before around control and substitution or personal service and mutuality of obligation. Other bits I didn't talk around the financial risk and integration and really how you differentiate yourself from an employee. That's what should be included within this status determination statement.
Right. Yeah, oh, sorry.
it's okay. What some companies have done is they've built a platform that you can go in and you can answer questions and kind of yes, no, yes, no, yes, no, and it will spit out an answer, and that answer kind of pre-fills this status determination statement. But it boils down to what the client's going to do. So how is the client going to assess? So will they do it themselves? Some clients do. Some clients will outsource it to a third-party specialist, such as ourselves. Some will go online and use an online tool. So what you may find is kind of floating from, let's say floating, that's the right word, moving from one client to another client. You may find that the status determination that you're given is slightly different each time, but the general format is, are you inside or outside, and what's the rationale behind it?
Right, so it doesn't have to be as detailed as basically answering all the questions, as for example, CEST tool asks you to basically give answers to each and every question. So it doesn't have to be as detailed as that.
No, but the advice that we give to hirers, and I know today is very much kind of the freelancer focus, not the hirer focus, but our advice to a hirer is you want it to be as comprehensive as possible, not to list out a yes, no on your SDS, but to kind of bring all of those answers together and then to put it in an understanding and a terminology that a normal human being will understand. This is the reason why we've said that you're inside, or the reason why we said you're outside. If you can't understand it, the likelihood is that the client will just get a challenge from the freelancer, and that's the last thing that the client wants to do, is to start having to deal with lots of challenge processes.
Yes, no, that's right. And in terms of obviously the timing, so when does the client need to provide an SDS to the contractor, at what stage?
So it depends on, really, the practical thing to do here is to have an SDS ready before a role is advertised. Because as a freelancer, the difference between PAYE versus your own limited company is significant. And if you haven't provided an SDS, an inside or outside determination, when someone like yourselves, how are you going to
finding someone,
yeah, how would you kind of attract someone into a role if you can't tell them how the kind of tax status is going to work? I think it would be nearly impossible. So anyone on an active assignment right now, you'll need to have this before April, because you'll need to understand whether or not you're going to continue on the role or not. Practical advice for hirers is to do it sooner rather than later. Some will leave it till last minute because they don't want to risk losing workers. Some have gone really, really early. A percentage of workers have left, but they've kind of backfilled before April. So best advice is just be transparent, do it sooner rather than later, and the people who want to stay will stay, and the people who don't won't.
Yeah, absolutely. And I suppose the key here as well is opening the conversation with the contractor as to obviously what terms apply, what are the working practices at the moment, and if the contractor is adamant that they wouldn't continue if it falls inside IR35, for example, it's sort of looking at ways to, I suppose, try and make it fall outside by changing the working practices and the contract itself, isn't it?
Yes, it's a kind of slightly different, and that's what we do with clients. So if somebody's inside IR35, we will educate hirers on how to change working practices and what they need to do to get workers outside of IR35. But that probably doesn't help in a great deal for kind of the audience today, because that's more of the hirer side rather than the freelancers bit. But absolutely, it's completely possible. Just because you have an outside determination today does not mean that clients cannot change their processes. It may just take a little bit of time for them to get their heads around.
Absolutely. Sorry, one more question in terms of the disagreement procedure. So is there a standard disagreement procedure that applies to every business using contractors, or is there is it unique to each and every client in terms of how they handle disagreements or disputes from freelancers?
Well, each client will have their own process, but what they all have to adhere to is they have to have responded to a challenge within a 45-day window. Now, if they haven't responded within a 45-day window, the client then becomes responsible for the liability. If a client hasn't produced an SDS, the client becomes responsible for the liability. A point I was just about to move on to was talking about reasonable care, and kind of underpinning all of this. So this whole status determination, the status determination is the end product. It's how you've got there, and reasonable care is the journey. It's what you've done as an organisation to apply HMRC and the last 20 years worth of case law into your determination process. It's what you've done as a business to get to the right answer. And if you can't prove that, you become liable. If you've not responded to your worker, you become liable. If you've not created an SDS, you become liable. So this is why some hirers have just decided to walk away from limited company engagements altogether, because it's not just the legal. So it's yeah, I mean, absolutely, it's fine. I say fine. It's okay. It's okay to not engage with limited company contractors if that's your policy. What's not okay is for you to make a blanket assessment. So what you cannot say is everybody is inside or everybody is outside, because what you've not done is you've not met your reasonable care obligations. So if you are not engaging with PSCs full stop, you're not making an inside or outside determination, you just choose not to engage, you don't have to go through this process. And maybe that's why you can start to kind of understand why some clients won't engage with limited companies, because it's a bit of a minefield. But kind of arguably, get the process right, and you'll put yourself in a much better position to attract the best talent to your organisation. But again, that's kind of more of a client-facing piece.
Yeah. No, thank you for that. That's really helpful.
Good. Kind of last point, just before I go on to FAQs, is there is an exemption for small companies. So HMRC have acknowledged that, that for small organisations there will be an exemption, and the exemption applies to any organisation which has a turnover of less than 10.2 million, assets of less than 5.1, and a staff count of less than 50, so 50. You need to tick 2 of the 3 to qualify as a small company. And if that's the case, so if you as a freelancer now are engaging with an organisation that kind of ticks that box, then they will not be responsible to go through the process we've just talked about. The responsibility sits with you, as it has done for the last 20 years.
Can I say, on the small business side, if a freelancer is working directly with a client, so there's no intermediaries such as the recruitment agency, do they have to ask in writing for that company to sort of confirm to them that they are a small business? Because sometimes it's quite tricky as a freelancer. You don't, especially now everyone's working remote, you know, sort of understanding how they fall in terms of the whether they're small, medium or large business. Yeah.
So you know, just to kind of put put myself in a position of a freelancer, I'm just about to apply for a role, and I'm asking the hirer, is this role inside or outside? Now, if the hirer doesn't provide me with an SDS, irrelevant of the size of organisation, they are responsible, so I don't have to worry about it. If the client says that they are a small business, okay, that's fine. I'll apply the rules as I always have done. If it turns out that they weren't a small business, but they've just got it wrong, well, the liability sits with the client.
Fine. So that's just good to know on that side. And I think it's important for people to know as well that if it's a small company but they belong to a bigger group or they're owned by a bigger group, it is, they look at the whole group. It's not that one small company. Is that right?
Yeah, that's right. And you tend to get that with kind of overseas companies. So you'll have a subsidiary or an office in the UK, which is small in the kind of definition of what we've just spoken to, but they are within a group of companies that far exceed that threshold. So yeah, you need to look at it in terms of the group. But again, client responsibility here.
Yeah.
So, you know, if they're talking that they're a small company, you just focus on making sure that you're compliant and you're adhering to HMRC's IR35 rules rather than the client having to do it for you.
One more question here, Rob, sorry. In terms of obviously the small company exemption, so am I right thinking there's no obligation to provide evidence of being a small company? So just a written confirmation is enough. Is that right?
Well, we kind of talked about what's best practice, not on this webinar, but over the past 12 months, we've talked about what should clients be doing, what should recruitment agencies be doing to get comfortable that it genuinely is a small hirer. And ultimately, it falls back onto the hirer to declare this to you. So if they are not providing you with an SDS, they've not met their obligation and they are responsible. If they happen to be a medium to large business, well, the risk sits with them rather than you, the freelancer. And if it is genuinely a small business, well, they don't have to provide you with evidence, but the caution would be, you know, you just need to make sure that you're adhering to HMRC's rules rather than the client adhering to those rules. So make sure that you are comfortable that if challenged, you could bat back any challenges around control or mutuality of obligation or personal service. And that's been the case for the past 20 years. So you don't have, there's no kind of formal documentation that they have to provide to you. But best practice would be to ask them for that if you're worried.
Right. No, that's really helpful. Thank you.
Thank you.
Good. Okay. Now, I've got a slide here talking about an umbrella solution, but umbrella's not the only option for you. And there's lots out there. It really just depends on what's available for you at that particular time. So if you were to go through a recruitment agency, some recruitment agencies offer their own payroll service. Most organizations outsource it to an umbrella solution. And really, that's because an outsourced umbrella solution, in the context that we're talking about, is an outsourced employment bureau. So you'll typically find that umbrella companies, because their business is employment services, they will have a lot of perks associated to their employment business that you wouldn't necessarily get with a recruitment agency's internal payroll. So you'll tend to find that they'll have enhanced pensions, enhanced insurances, enhanced benefits platforms, that kind of stuff. That's why lots of agencies like it, because they can offer something that they can't. But you could also, there's a way that you can have your PAYE taxed at source and paid into your limited company. But the reality is it's not a great option because you're having to pay tax as an employee, but you're missing out on all of the benefits that you'd associate with a genuine employment contract. But nevertheless, there's ways to kind of get paid PAYE. It's not just umbrella. But as it's the most common option, it's good to talk about. So how it would work with an umbrella company is, umbrella company would engage you on an employment basis. So they would issue you with an employment contract. And at that point, you'd get similar rights and benefits that you'd imagine you'd get as a full-time member of staff. So your statutory rights and benefits like sick pay, maternity pay are a given. You'd also have your insurances provided by umbrella company. So as a freelancer, you may have to provide PI or PL styles of policies, but now it's the umbrella company's responsibility to do that. And the umbrella company will enroll you into pension schemes as well, and generally offer you different types of pension schemes. So it's, start to get some of the benefits that you'd imagine you'd get if you're actually cards in on the books. And then from
I'm sorry, Rob, so if the status determination has been done, the client has deemed that the assignment doesn't fall outside of IR35, therefore tax has to be taken off its source and they have to work inside of IR35, then this is the one of the top solutions. So this is if you fall inside.
Yeah, it's the most common solution. You've got agency payroll potentially as an option, but not all organisations offer it because an umbrella generally offers a enhanced version of, or you can go through an option whereby your tax is deducted at source and paid into your limited company. But again, not all companies offer it because it doesn't actually give you any sort of real benefit above and beyond what you get through an umbrella solution. So yeah, I guess that's kind of why we've got the slide on this.
Excellent.
How it works from a cost point of view as well. So an umbrella company will have a margin, in and around kind of £20 a week is an average margin for an umbrella company. And whatever rate of pay you're on, that rate of pay goes over to umbrella company. Umbrella company will deduct employment costs. So employment costs consist of employers NI and apprenticeship levy. So you add those both on together and around 14%. And then whatever's left is subject to income tax and national insurance. And this is going to be kind of a new concept because at the moment, if you operate through your own limited company, you'll pay yourself a very small wage and then you'll take the rest of the dividend. Dividends aren't subject to PAYE tax. But if you move to kind of agency payroll or a deemed limited company option or an umbrella company, this new concept of employment deductions materializes. And that's really the main difference between an inside and outside role is this additional national insurance. It always brings lots of questions. So, by all means, we at the end or through the FAQ, we can kind of touch on that in more detail if you want.
Thanks, Rob. That's really helpful. Oh, sorry, Emma, you were going to ask.
No, you go. Yeah.
Obviously, we've come to our questions now and our Q&A session. So I suppose one of the key areas we have had a lot of questions around is the sole trader setup. So as by the letter of the law, IR35 does not include sole traders, so it only includes contractors that work through an intermediary, such as a personal services company, i.e. a limited company. So am I right thinking IR35 does not apply to sole traders, first of all?
Correct. Yep, excellent. You're right.
So is the real loophole to is it the real loophole to avoid IR35 altogether to set up a sole trader then?
You close one door and open another. So the self-employed market, you talk about, in the UK, it's quite straightforward. You're either employed or self-employed. The problem is you've got different versions of self-employment, and sole trader is one and limited company is another. So where a limited company has IR35, sole traders have a different set of standards, a different set of rules, but ultimately it's aiming to get to the same point. So if you're a sole trader, are you a disguised employee or are you genuinely self-employed is the question. Now, with IR35, you've got the likes of control and substitution, personal service, mutuality of obligation. With sole traders, it's a little bit more straightforward. So we tend to look at supervision, direction, and control. And it's a little bit easier to get our heads around, but the revenue, it's again a little bit subjective because it's not just about are you under supervision or are you under direction or are you under control. It's whether or not the client has the right of SDC. We talk about it in terms of SDC. Now, if you are engaged through an intermediary, such as a recruitment agency, rules came about in 2014 under the intermediaries legislation, which meant that whichever entity closest to the client would be classed as intermediary one, they would be liable. So just in a kind of a scenario here, Kaiser, so if beyond the book, engaged with client A and you paid a worker as a sole trader, irrespective if the sole trader had paid all of their taxes correctly through their self-assessment tax return, if this worker was under supervision, direction or control, or the client had the right of, it would be your organisation that would be at risk to back pay all of the tax that should have been declared on a PAYE basis, plus fines, plus interest.
And then if a freelancer has a lot of direct clients, which a lot do, and they are a sole trader, then the liability would fall on the client that they are working for. Is that correct?
Yeah, absolutely, absolutely. So unfortunately, there is no loophole where you can go direct to a client as a sole trader, and there would be no sort of liability if you're classed as a disguised employee. And the liability either goes to the client or it comes to you as an intermediary, which is why you tend to find that lots of recruitment agencies don't engage with sole traders for that reason. And again, you know, kind of going back a number of years, clients didn't used to engage with sole traders. And I guess why would you if you could engage with a limited company that offered a similar, if not better, take home with no liability to the client? So these kind of long and forgotten bits of legislation are now starting to come back up to the top, and clients are starting to kind of get their heads around, okay, if we don't engage with limited, but we engage with sole trader, does it pose a risk? Yes, it poses a risk. So you may find that in the short term, clients allow sole traders, and when they get their heads around liability, they may disengage with sole traders. So I guess just want to kind of keep our eyes on, isn't it?
Yeah, it is important, and it comes up a lot in our world. So yeah, it's good to cover it.
Yeah. So another question we have is, so should a freelancer close down their existing limited company if they are transferring to PAYE solution?
Yeah, okay. You know what, we're going to go through a few questions now, aren't we? And I think what everyone should be able to do is they should be able to walk away from this webinar and kind of really knowing where they stand and knowing what options they've got open. And you know, there could be loads of reasons, you know, equally as compelling reasons to keep it open as there would be to close it down. But what I will say is you do not have to close down your limited company if you don't want to. There's absolutely nothing stopping you having your company open, having a role through, say, an umbrella company, a role through an agency payroll, a role as self-employed. You can have as many different engagements and payment processes as you want, but it just, the more you have, the harder it becomes to manage. So kind of in terms of, you know, should you close down a company, I would be saying to you, it really depends on how long you're going to be operating through your limited company for. So if you can imagine that you're going to move from role to role, and you may be going from an inside to an outside role and then back in and then back out, you probably just want to keep your company open. But if you've kind of landed a long-term role for the next 6 months plus, and it's going to be PAYE, then you may have little to no benefit to keep that company open. Yeah.
Right. Okay. So in terms of options, if I wanted to close down my business, what are my options?
Right. Yeah. Okay. So really, there's kind of two ways you can do this. So you can either go down the liquidation route, and we'll talk through that, or more traditional kind of final set of accounts cessation route. So if I just talk about liquidation first of all, so if you've been trading through your company for 2 years already, and you have no intention to operate through a limited company again for the next 2 years, then you could liquidate your business. Now, if you liquidate your business, you do it through a voluntary liquidation, not a compulsory liquidation. They're very different to each other. So it's called a members voluntary liquidation. And what it does, it effectively allows you to get access to entrepreneurs tax relief, which is now called business asset disposal relief, but same thing. Essentially, it gives you a much more favourable tax rate when you close your business down. So depending on how much cash you've got in the bank, potentially you could save yourself thousands of pounds. And
surely liquidation is not a good thing, though, is it?
Yeah, again, it's just honestly, it just depends in kind of the context of what you're using it for. You know, Emma, when we talked a little about this yesterday, didn't we? And I said to you, you know, you never see a company, you never see an organisation in the news doing really well for themselves, but having to go into liquidation. You know, there's a kind of a stigma that comes with liquidation that you only ever hear about it when it's a bad thing, but that's a compulsory liquidation. A voluntary liquidation is very, very different. Entrepreneurs' tax relief is a benefit that we have with the government as it stands today. It may not be around for the next few years, but we've got it today. What I would say, though, Kaiser, is if you've got over £25,000 in the bank, you have to bring in an insolvency practitioner to do it. So you've got to go through a formal liquidation. If you've got less than 25k in the bank, you don't have to. You can do it through as an informal liquidation instead. But yeah, maybe don't look at liquidation in the same way as you may look at it as administration, because you know, different things, different contexts.
Okay, so if I haven't got to 25 grand in my bank, what are my other options to close down the business?
Yeah, as most of us don't. So yeah, absolutely. And you know, I mean, you don't have to have 25k either. You know, you might have 5 or 10. But what I would say with that liquidation piece is, as good as it does prevent you from operating through a company for the next 2 years. So bear that in mind. Your other option, Kaiser, would be just to file a final set of accounts. So this is you declaring to HMRC that you're wrapping up your company. We call it a cessation set of accounts. It's your final accounts. And what you need to do is just make sure you've got enough cash in the bank to settle any outstanding liabilities. So what you can't do is if you're running at a deficit, you've maybe eaten into your tax fund, you can't walk away from it. So you've got to kind of inject some cash back into the business before you walk away. But there's no sort of tie-ins on this one. So if you close your company down and in 3 months you decided to open up a new one, yeah, absolutely fine. You just don't get the same tax breaks as you do through a liquidation.
Oh, okey-doke. No, thanks for that. That's very helpful. And what are my options if I wanted to keep my business open? Good.
You know, I think this is probably going to be the reality for most. I don't think that most people are going to close their company down because the nature of your roles, you know, you'll naturally be going and starting new roles. So if you're going to keep your company open, there's a couple of things that we need to look at. So first of all, we need to consider any tax implications it may have on new employment statuses. And we also need to think about what to do with any cash you've got in the bank. So I'll talk about that one first. So if you've got retained funds, what can you do? One option would be to invest it into pensions. So pensions, you know, it's a great way to get that kind of immediate tax relief. And it's almost, well, it's the opposite to a liquidation, really. You know, you're getting all your tax relief up front, but kind of locking the funds away for a later date. You know, we all know how pensions work. But you can also start to look at investments as well. So putting a financial services hat on, when you talk about investments, you naturally talk about in kind of stocks and shares and bonds and ISAs and that kind of stuff. Well, I'd say a great alternative to pensions would be property. So if you've got money in the bank, you don't want to close your company down, you could use that to invest into a property. If you decide to go down that route, just make sure that you have a chat with a financial advisor first, because you want to make sure you get the right tax advice and you want to get the best mortgages. So okay. If that's of any interest, you know, kind of catch up with us afterwards and we can chat you through that option. But that's what I'd say to do if you've got any funds in the bank. Right.
Okay. And you're mentioning obviously the tax implications when working through an umbrella or PAYE. What is that? Surely you still get all your tax allowances, don't you?
You know what? We put a slide. Obviously, we kind of know which way we're going in this, and of course, we kind of put the slide together now, haven't we? And this is one of the unknown risks or hidden risks with having multiple employment statuses. So as it stands today, you will be operating as a director through your own limited company. Even if you decide to close your business before April, on average, it takes about 6 months to walk away from a company. So one way or another, you're still going to have a company come April. And if you signed up through an umbrella company or you signed up through an agency's payroll, what you're doing is you're signing up to a new employment status, a secondary employer. HMRC will recognise that you now have 2 employment statuses. So when your money is paid through an umbrella or agency payroll, you'll not get any tax allowances. You'll end up going on emergency tax. And it doesn't matter whether you're a basic rate earner or a higher rate tax earner, you'll be on an emergency tax. So that's going to cost you kind of anything between kind of £70 to £100 a week difference because you don't get your tax allowances.
Oh, I'm sure that will be a big concern for a lot of the freelancers though. Are you able to give us any solutions to these or this or you know, is there any way around it? Any sort of options at all?
Yeah, and I've detailed a little bit in the slide here as well, Kaiser. So it's actually a really straightforward process. You just need to know what to do at what point. So if you accept a new role that's going to be PAYE, but you've still got your company open and you've not got any more income coming through your limited, all you need to do is go and have a chat with your accountant and tell them to reduce your, to P45 you from your limited company. So that doesn't mean that you're walking away from the business. It doesn't mean that you're closing it down. It just means that you're P45ing yourself. And that will be updated to HMRC. HMRC will recognise that you now only have the 1 employment status and all of your tax allowances can get sent over to your new employment vehicle. You know, if it's umbrella, I think for ease purposes, I'm just going to start referring to it as umbrella so I don't talk about lots of different things. So it means you go onto the right tax code. So easy win.
Right. Okay. Yeah. That's very helpful to know. Obviously, there are a few options, and thank you for taking us through those. I'll hand it over to Emma now. We've got a few more questions left. I'm so sorry. We are running a bit late. So Emma, over to you.
Thank you, guys. I know you touched on pensions earlier, Rob, and for those who don't know Rob, he's very passionate about pensions, aren't you? And very knowledgeable.
I do enjoy pension.
So how does this kind of work from a pension perspective?
Yeah, okay. I guess with us being close to the hour, I'll try and speed it up a little bit. So pensions are great. Whether you're paying money into a pension through your limited company right now, or you've never done it before and you're maybe looking at getting this new PAYE option, it's a great way to bring down your income, so you get your tax relief on it. And what I would say is, if you're paying into a scheme through your limited company at the moment, if you do decide to join an umbrella company, there's absolutely nothing stopping you continuing to pay into that umbrella scheme, into that pension scheme. So some companies will pay it indirectly, some companies will put it into a pot and you just transfer it out. There's loads of different ways of doing it. Probably just a couple of bits to look out for would be first of all, make sure that your company can facilitate it, and I'm sure they will. Make sure there's no hidden fees. Sometimes companies charge you administration charges to send it over, so just check that one out. And when we talk about kind of NI savings, making sure that you get your full national insurance contributions and savings on your sales tax.
What do you mean, though, by full national insurance savings?
So if I was to kind of go back on that first slide, we talked about how your income's broken up into two parts. So you've got your employer deductions and your employee deductions. Now, if it's a genuine sales tax, it comes from the top. So you get tax relief on everything. You get tax relief on all of your employer's costs and employees' costs. Yeah. But for it to be classified as a sales tax, it doesn't necessarily have to come from the top. It could come from the middle, and you get your employee savings, but not your employers. So it just makes a difference. That's all. So it's worth just checking.
Yeah, important. Sort of salary sacrifice schemes. Are they all covered or not? Do you get a lot on umbrella?
Yeah, so some bits I've not spoke about there. So other than you being able to contribute into kind of any scheme you want, If you've not done it before, you can contribute up to £40,000 a year. And if you've not contributed to a pension previously, you can actually go back as far as the last 3 years. So in theory, you could contribute up to 160k into a pension pot if you wanted to. You know, obviously you want to make sure it's financially viable for you. Yeah. But again, if anyone's interested in pensions, maybe kind of tap us up afterwards and we can kind of run you through the pensions piece.
Good thinking. As insurance, now I was only talking yesterday to a contractor who I've just placed for a couple of months, starting tomorrow, and he was asking me how much insurance, you know, does he need to get? What is the, you know, what is included? You know, there's a lot of confusion, I think, around insurance.
Yeah. So again, I'm just going to refer to umbrellas now, just for kind of speed of. But umbrella companies will provide professional indemnity, public liability, and employers' liability insurances. That's what they'll have to do contractually, whether there's an agency involved or not. What you may have through your limited companies at the moment, insurance policies or income protection style of policies, they're not statutory insurance requirements, so they won't come as standard. But what I would say is if you're planning to close your company down, don't be too hasty to close down your life insurance policies or income protection policies, because they won't be included as standard. And there's nothing stopping you transitioning it from your company policy over to a personal policy. And you can do that nowadays without having to go through revalidation or health checking processes. Because if it's something that you want and need, if you close it down and then re-sign up later down the line, you'll find that your premiums have probably changed from when you first signed up.
You're older. We're all getting a little bit older.
Most likely. Yeah, absolutely. You know, stuff that's not included as well. And you know, death in service, it's not included. It's not a statutory benefit. And
that's tricky because you know, that's often seen as quite a good employment benefit. Can you get that through an umbrella? Can you ask you provide that as an extra paid for service?
Yeah, so you're right. It's a benefit rather than a statutory requirement. So what I would say is good umbrella providers will offer it. There'll generally be a cost associated to it. They'll offer you stuff like personal accident cover, death in service, those types of policies. So I guess if you find yourself in the market and you're chatting to an umbrella company, just ask them, do you offer it? And if so, it is for a charge.
Good to know. I know we're having to move swiftly on, but I think it's quite important, this slide here, in terms of if you're doing it, you know, sort of roles inside and outside throughout the year after the 6th of April, how is that going to work, kind of from a tax perspective?
Well, you know, I've not. So what you've probably gathered from this slide deck so far is as much as we offer accountancy and umbrella services, we've not spoke about what we can offer. This has been a kind of 100% educational. We just want to make sure that you know where you stand. But I have included a slide to talk to you about what we can do, and that's it. So this is the new reality, isn't it? There's lots of clients with different views on IR35. Some are small, some are medium. And you probably will go between an inside or an outside style of role within the tax year. And we've always offered umbrella and limited company services, but they've always been standalone products. Neither of them talk to each other because there's no software out there that you can get off the shelf that kind of links accountancy and payroll software. And it creates a whole bunch of issues. Nobody wants to pay for an umbrella company if you're having to pay an accountant as well. That's the first bit. That whole kind of tax code issue that we spoke about, where you need to P45 yourself from your business, there was nothing really that existed that kind of done that for us. So what we've done is we've created a tech platform that sits below our umbrella payroll software and our limited company accountancy software, brings it all in to kind of a single app, single kind of login, where we can have, and you can have, instant visibility on all of your umbrella income, all of your limited company income. So in theory, you could have 1 day a week through umbrella, 4 days through limited, or vice versa. You could have, Monday, Tuesday, Wednesday umbrella and Thursday, Friday limited. Ultimately allows you to straddle multiple employment statuses across multiple agencies, multiple clients for one fee rather than paying for both. But it allows us to do a lot of that donkey work for you. So it allows us to, if your income's coming into umbrella, we know to P45 you from your limited company. We know to fluctuate your director's fees if we need to. We know what to do from a pensions perspective. If you've got one, have you got it set up in the right tax efficient manner? If you've not got one, what could you benefit by having it? It's kind of linking in all of those little bits of work that you may need to do through one platform without having to pay 2 different companies, but ultimately one service. So again,
good solution.
Yeah, I'd say if anyone's interested in that, if anyone's got any worries around, if I have to go through an umbrella company, I don't really want to pay for it if I'm going to have to pay my accountant anyway, or you're concerned about the tax implications of linking them both together, just give us a shout afterwards. I will more than happily talk to you about it.
Yeah, the last slide's got Rob's email address, so and we're also going to be obviously sending the slides to you, but yeah, there's ways to get hold of you. But so to summarise your top tips, what would they be?
Good. So I've got 4 here, haven't I? I've put out. So first of all, I'll talk about retained funds. So if you are genuinely looking to close your company down and you've no intention to operate it again within the next 2 years, I would look at the liquidation route. It depends on what cash you've got in there, but you could save yourself thousands of pounds, so it's worth looking into.
Yeah.
The next bit would be pensions. So, if you've not got a pension set up at the moment, it's a great way to get tax relief, especially now that we might be looking at these employment overheads that you've not had to do before. It's a great way to kind of get those benefits. Thirdly, secondary employment. So if you find yourself moving between PAYE and limited company in the same tax year, although we've got the tech now, we can do it. And if you want someone to do it for you, that's great. We'll do it for you. But you can do it yourself. So, just make sure that you've got that open communication channel between your accountant and your umbrella company, and make sure each organisation knows what money's going into which vehicle. Yeah. Just so you don't find yourself any kind of nasty surprise at the end of the year.
Yeah, no one wants that.
No, I guess my last point here is, whatever PAYE option you end up going for, you are in control here. So whichever provider you end up going with, just maybe remember some of the points that we've talked about on this slide deck today, and make sure you're asking your umbrella companies, because you've got the choice. You don't have to be kind of shoehorned into one option. No,
you shouldn't actually be told. Is that right? So if a client's saying you have to use this one umbrella company, do they have to, or is that allowed?
Yeah, absolutely. Recruitment agencies and clients may have a list of companies. You'll find that Brookson are on a kind of a preferred supplier list for lots of agencies and hirers, but that's because of compliance and processes. If you want to work with a company, as long as it's compliant and the organisation is happy that they've met their compliance accreditations, yeah, you should, in theory, be able to use whoever you choose.
Yeah. Well, I say we've been working with you for many a year, and what we love is just you know your stuff so well, and you're forever educating us. So yeah, we have a lot to thank you guys for as well. Let's hand over to Kaiser, or actually you can wrap up, Rob, and then yeah.
Absolutely. So on behalf of us all at Beyond the Work, thank you so much, Rob. Thank you, Brookson, for delivering this presentation to us today, and thank you everyone for joining as well. We hope you have found it helpful, and obviously if you have any other questions don't hesitate to get in touch with Rob or myself or Emma. Obviously, contact details are on this slide. We will make the recording and slides available to everyone in the coming days. And I'm so sorry we haven't had time to answer everyone's questions today, but we will endeavour to do so. And we'll obviously send out a Q&A document in the coming days as well. So that is coming. Also, there are some IR35 resources available on our website, and we are also hosting a free webinar for clients next Wednesday. So if you can think of anyone who would benefit from attending the client seminar, please don't hesitate to share the link on our website. And once again, thank you for joining us today, and we hope to see you again very soon.
Thank you very much. Thank you, Rob.
Thank you.
Take care, everyone.
Okay. Bye. Bye.
Bye.